Assalamualaikum warahmatullahi wabarakatuh. My name is Amni Riffqie bin Shah, and today I would like to present about the responsibility as taxpayer and the self-assessment system. Okay, firstly, I'll present about the responsibility. Okay, first of all, the responsibility as taxpayer is have a clear understanding of what constitutes taxable income. This includes all earnings from sponsored, brand content, paid reviews, and any other income generated through their online business on social media. After that, providing accurate and truthful information on their tax returns. This includes reporting all sources of income, deductions, and credits accurately. Then emphasize the importance of maintaining accurate and detailed records of their income, expenses, and any relevant financial transactions. Besides, they are required to file their tax returns by specific deadlines. Filing late may result in penalties and interest charges. A late payment of 10% will be imposed on the balance of tax not paid. Taxpayer can appeal upon the tax increment imposed by submitting a written appeal to collection unit of Hasil Office that's handling their tax file. Lastly, make an effort to understand their tax obligations, including the types of income that are taxable, available deductions, and any credits for which they may be eligible. Lack of knowledge about taxable and non-taxable income can lead to common mistakes on tax returns. Now, we will focus on self-assessment system. First of all, they need to familiarize with the tax regulations and guidelines applicable to social media influencers. Failure to comply with the SAS or providing inaccurate information may lead to penalties. Next, stay informed about changes in tax laws and regulations that may affect influencers. Depending on the jurisdiction, there may be tax credits or reliefs available. This could include credits for education, home office expenses, or other applicable tax incentives. After that, they are required to register for and collect VAT or GST on their services. This is particularly relevant if they offer paid promotions, consulting services, or other taxable services. This will ensure that they remain compliant with the latest requirements. Other than that, they need to file income tax return providing detailed information on their income, expenses, and any allowable deduction or tax relief they may be eligible for. Using the information provided in the tax return, they need to calculate their own tax liability by applying the relevant tax rates to their taxable income. Lastly, they are responsible for making timely payments to LHDN. Payment deadlines are set by the tax authorities, and failure to meet these deadlines may result in penalties. In addition, LHDN has the right to audit and verify the accuracy of the information provided. This ensures compliance with tax laws and regulations.
My name is Fazari bin Najid. I will present about return and assessment. A tax return is a document that is submitted to the tax authorities that includes information on income, expenses, and other relevant financial data that is used to determine the tax liabilities of an individual or company. Tax returns are used by taxpayers to compute the amount of taxes owed or refunds due, as well as to declare their income to the government. For the assessment, tax assessment is the process used by tax authorities to determine if the data included in the tax return is accurate and to compute the actual amount of tax that the taxpayer is required to pay. Tax authorities may issue adjustment, correction, or additional taxes due if there are discrepancy or inaccuracies in the tax return. Amendment of tax return. Making adjustment to a tax return that has already been submitted is known as amending the return. After filing, taxpayer may need to make changes to their tax return if they find mistakes or errors. The reason is reporting more income, claiming credits or deduction that were first disregarded, updating personal information, or changing the filing status. Taxpayer usually use IRS Form 1040X amended US individual income tax return to make changes to their tax return. Taxpayer can submit information on the changes they are making and the reason behind them by filling out this form. Taxpayer might also need to attach any supporting documentation that support the changes that are being made.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Alif Iqmal bin Muhammad Nasir, and I will continue to the offence and penalties. In this part, I will explain about Section 112 Clause 1 and Section 113 Clause 1 of Income Tax Act 1967. Based on the scenario, Miss Hanis is likely don't have knowledge about her tax obligation, so I will explain to her about the offence that often committed by the taxpayer, which is failure in furnishing tax return and notice of chargeability. So, the offence of failing to submit the return to the Inland Revenue Board will fall under Section 112 Clause 1 of Income Tax Act 1967. According to this act, any person who make default in furnishing a return or in giving notice without reasonable excuse be guilty of an offence and liable to be fined not less than 200 ringgit and not more than 2,000 ringgit, or to imprisonment of the period not exceeding 6 months, or to both. However, if it necessary, the taxpayer can show the reasonable excuse to the IRB that stated that he is unable to provide tax return at the due date. Then, the tax return may be submitted within 7 months from the year ended. That means late submission will be counted start from the month 8 after the year ended. So, the table below show the penalty rates based on how many months the submission is late. For the late submission up to 12 months, the penalty rate is 50% of the tax payable. And for late submission more than 12 months and up to 24 months, the penalty rate is 30% of the tax payable. And if the late submission is more than 24 months, the penalty rate is 45% of the tax payable. Next is Section 113 Clause 1 of the Income Tax Act 1967. Section 113 Clause 1 further explains what if the taxpayer submit false information of the tax return. According to section, any person who make an incorrect return by omitting or understating any income of which is required by this act to make a return behalf of himself or another person, or give any incorrect information in relation to any matters affecting his own chargeability to tax or another person, shall be guilty unless he satisfy the court that the incorrect return or incorrect information was made in a good faith. The scope under the section is the incorrect return which contain of omitting or understating income and incorrect information which can affect the chargeability of tax. Anyone who is found to be guilty under this offence, he or she will be fined not less than 1,000 ringgit and not more than 10,000 ringgit. And then, the special penalty of double the amount of tax will be compounded to the taxpayer for his undercharged income declaration. Therefore, I will advise to Ms. Hanis to prepare his tax return and notice of chargeability within 7 months after the year ended, or it can be earlier. Next, I will advise Ms. Hanis to double check his information in the tax return to avoid understating any income which is required by this act.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mohd Farish Najimie bin Zamaree. So I will continue the conversation with appeal part. First of all, I will present about how to appeal. So there are a few steps how to appeal. So taxpayer have the right to file an appeal if they receive a notice of assessment and disagree with it. Within 30 days of the notice date, an appeal must be filed. The IRBM or LHDN branch that issued the assessment must receive a written appeal from the taxpayer. After that, taxpayer must complete a Q form, after which the appeal will be sent to the Special Commissioner of Income Tax. Taxpayer must use an form to request an extension of time if they need more than 30 days to file an appeal and have a good reason. The form must be sent to the Special Commissioners of Income Tax for their consideration. So for the second part is what offence they allow appeal. So the taxpayer has right to appeal under Section 99 against the following assessment. First of all, assessment or additional assessment or advanced assessments made as the result of desk audit or field audit findings, tax navigations, investigations, or best judgment assessment, which is made when there is no submission of tax return or late submission of tax return. So I will explain to you when to appeal. Okay, according to Section 99 of the Income Tax Act 1967, Income Tax Act provide that a person who is aggrieved by an assessment which has been made on him for any year of assessment by the Director General of Inland Revenue, or we call it LHDN, is entitled to appeal against the assessment. Okay, the right of appeal under Section 99 of the ITA shall not apply for the following case. The first one is deemed assessment under subsection 90, class 1 of the ITA, or deemed assessment for amended income tax return form under Section 91A of the Income Tax Assessment. However, under subsection 99 clause 4 of the income tax assessment, income tax acts, if the taxpayer disagrees with the treatment stated in public ruling or non-stand rules and practice of the Director General of Inland Revenue prevailing at the time when the assessment was made, the taxpayer is entitled to make an appeal. Example of non-stand rules and practices are as follows: private rulings or advanced rulings, guidelines in the Land Revenue Board of Malaysia, decision of cases at the Special Commission of Income Tax (SCIT) level, and the court, or another written evidence.